Good afternoon. You're watching us here on Halftime Report. This is me, Mangalam Malu. With me, Ekta Batra, looking extremely strong for the market. And the biggest reason for that is the good news that the Fed doled out last night by telling you that there could be 3 rate cuts that would happen on account of inflation, which is under control. But speaking of inflation, we also have the wholesale price index coming in for the month of November at the bottom of your screens. Hi, Ekta.
Hi, Mangalam. Yes, absolutely. So it's gone into inflation from deflation category. So that's the big headline which is coming for the WPI index this time round for the month of November. And I think this is the first time that it is in inflation territory from March of 2022 or rather March of 2023. So it is a multi-month high, you can say, when it comes to the WPI inflation. It is back into inflation territory after seeing months of deflation. As you can see, the details are flashing on your screen. The manufactured products inflation, or rather deflation, is at around minus 0.6%, but the headline figure has come in at around 0.26% versus a minus 0.26% in the month of October. The details on your screen: primary articles inflation has come in at around 4.76%. So there's quite a spike up which has taken place there, along with the food inflation also, which is at around 4.7% versus 1%. We do have Lata with us to tell us more. Well, Lata, this was expected.
Yes, actually, people were expecting that this time it may be flat.
Right.
Compared to that, it's come at a plus 0.26. So inflation is a little worse than what analysts were expecting. I didn't do a poll because not everyone gives you a number, but the one or two who told me it will be flat, like 0 or minus 0.05 thereabouts. That was the number I got. Compared to that, it's a plus 0.25%, so it's slightly higher, but these are very small numbers. What perhaps we should worry about and should not be surprised is look at the food inflation. Yeah. This is the number. It's so positive that it is pulled up in spite of a very negative fuel inflation. See, all these, why are they negative? Right. Year ago, what was fuel price? Exactly. Post-Ukraine war. So year on year, WPI was negative because year ago coal was very expensive. Copper was very expensive. All these are big items in the WPI index, and all these year on year have almost crashed because the Ukraine effect is behind us, and that's why we were having a long negative period. But now this positive, I think, is a little bit of a bad news because it's a little higher than expected. And it's largely driven by food, but not entirely, because manufacturing is positive.
Right. It's driven by vegetables, the food, because the vegetable index is up 16.5%, year on year. So that
it was up 30% in CPI. So that also is not a shock. In CPI, the number was 30%. So the food index should not shock us. We were prepared for pulses to be expensive. Likewise, as you point out, vegetables. Cereals index is up 1.2% on the month. As you point out, vegetables 16.5 is on the month. So, I mean, this was expected. But I think what we should note is that wholesale index, even for the manufacturing products, is almost entering flat terrain, which means the negative impact will move away. In a way, it may be good. It will also give us a higher nominal GDP.
Right.
Until now, nominal GDP is very close to real GDP because of the low WPI number. That also gets erased, which is good. But let's invite the expert, Aditi Nayar, Chief Economist at ICRA, is our guest. Aditi, I don't know if you're able to see some of these numbers on any phone or screen that you may have in front of you. But just to read, core WPI is now minus 0.4 versus minus 1% in October. So the negativity is going away. We are almost in flat terrain, but for the headline index, it's already positive, plus 0.26%. Compared to, of course, 7 months of negative number. In fact, September also has been revised to a more deflation. It was minus 0.7%. The small poll I did gave me a similar number for October, but inflation for September has been revised down to minus 0.26%. Metals index is down 0.9%. Edible oils is up 0.1%, but as Mangalam was just telling you, Aditi, cereals are up 1.2% on the month. And vegetables, of course, up 16.5% on the month. I mean, YOY, I think it will be 30%. Manufactured products index has reached positive 0.1. I hope I've given you all the important ones. Go ahead, please, your comments.
Thanks, Lata.
We had expected a small inflation to emerge in this month for the WPI, so our forecast was 0.1%, and it's slightly higher than what we had penciled in because of the food index jumping faster than what we had initially penciled in before having seen the CPI data. Now, I would say that looking ahead, unless we have a sharp retracement in food prices, which may not be the case across all the food categories, we should probably be prepared to see WPI inflation printing between 1 and 2% for the rest of this fiscal year, as that base effect goes away and things normalize. So we've, last few weeks, commodities have been a little bit on the softer side. Having taken that into account, in any case, the tailwind as compared to last year is going away. And that is something that should bring us back into a 1 to 2% kind of a range for the WPI inflation over the next 4 months. Nevertheless,
globally core inflation is falling like we saw in the US and like we saw in our own CPI. It's coming a tad lower than the month of October. So not to worry, right? The WPI numbers, the base effect wears off, but it is not as if things get pricier for industry, right?
No, in fact, the Bloomberg Commodities Index, for example, has been trending a little bit softer in the last few weeks as compared to the trend in Q2. But when we compare quarter on quarter, the gap is now narrower in Q3 as compared to what it was in Q2. So this is more of a base effect which is playing out, and not that commodities are getting pricier for industry.
Okay. There it is, onion inflation.
101%, and that's doubled
up from a 62% a month ago.
Wow. Go off onions maybe.
It's supposed to be a spike and then probably...
Onion, I was told, is a 90-day product, a 90-day crop. I was told. I'm no expert on this. Aditi, when does onion ebb away and stop giving tears? Somebody told me it's a 90 days crop, so after it plays out for 3 months, things should normalize. You tell us, when do we see food inflation ebbing at all?
So we do have a base effect which is going to start kicking in, and optically the food inflation numbers will start looking less menacing. Having said that, there are problems with specific crops. We discussed that day for the CPI as well. For food grains, the Rabi season is not looking so good so far. And on vegetables, yes, different crops, different vegetables have their own cycles. The other specific problem with onions is that onions are grown in very few districts in our country, but they're consumed almost all over the country. And that is something that creates this sharper spike for onions sometimes as compared to many other vegetables that we have. So I would say we probably have another month or so at least of onion tears. And hopefully with in Q4 things should start looking better.
We should not be shedding tears at all. Look at the way the US yields have fallen to below 4%, 3.96 or 98 when I last checked. What's your overall impact? The big chatter in the stock markets is that if the Fed is saying that they're going to start cutting by June maybe, and there are 3 cuts priced in next year versus the dot plot saying 2 cuts in the September dot chart, then can the Reserve Bank be far behind in cutting? Have your expectations changed?
Lata, our expectation from the Monetary Policy Committee was that rate cuts can start by August. So we were pricing in 2 to 3 rate cuts between August, October and December of next year. So if the Fed starts cutting by June or July, then I think, our cut expectations would be very much aligned with what the Fed has indicated yesterday. So I won't really change my expectations at this point in time. And I think maybe in another couple of months we'll have a bit more clarity on how soon the Fed really intends to start cutting. So is it going to be the middle of the year, or is it going to get upfronted a little bit? Although I would still expect that the pause will be extended out to some extent. So middle of next year is what we're thinking for the Fed, and August is what we're still thinking for the MPC.
Okay, that's very good to hear. The markets at the moment are not pricing much in. Indian yields are down by about 7 basis points. Rupee is rock steady. I think RBI is back as active as ever, so we're not seeing any difference. Just a final question, Aditi, what's your year-end nominal GDP, I mean, even real GDP for that matter, RBI is at 7. Where are you? And where is your nominal GDP expectation now that WPI is turning positive?
We're at about 6.5% for real GDP, and for nominal GDP, we're at around 9.5% now for this year. So a little bit lower. We had initially expected the WPI to turn positive and get into the inflation zone by September or so, which, as we've seen, has only happened now in November. So that's one of the reasons that we've pulled down our nominal GDP forecast despite upping our real GDP forecast.
Okay.
All right.
We'll leave it at that. Aditi, thank you very much indeed for joining us. Just a matter of small detail. The nominal GDP was calculated as 11% higher by the government when they made the budget. So, 5.9% fiscal deficit of 11% growth gives you a slightly higher number. Now, if the nominal GDP is going to be 9%, the fiscal deficit will have to be that much lower, but it's not a great deal.
Nothing to worry.
Out of 17 lakh crore, it may be 16.8 lakh crore. But still, there is that pinch.
All right, Lata, thanks a lot for that. So the news from the center, as they say, is that WPI inflation has turned mildly positive after 8 months, and nothing really to worry because the lower inflation and lower rates in the US are buoying our markets higher out here, and as a result of which the Nifty sitting with a gain of 240 points. Take a short break, come back, we focus on individual sectors. It's the pharma sector which will be in focus, and this is something that you might be interested in, diabetes and weight loss drugs. Ekta is going to talk about that in just a bit.